A warm welcome to Phillip Roundtable session. My name is Kim, your host for today. We are honored to have three speakers with us today to talk about factor-based investing and thematic-based investing. Our first speaker for today is Miss Penny Leong. Miss Penny Leong joined Allianz Global Investors in February 2018 as part of the retail distribution team in Singapore. She is responsible for enhancing the relationships and business development with various business partners in Southeast Asia, particularly Malaysia. Before joining Allianz GI, Ms. Leong was the head of distribution in Amuni, Malaysia. She was also the head of IUTA in M Funds Management Berhad, leading the sales team servicing all institutional distributors of the company. She started her career in the financial industry as a relationship manager, financial institutions in CMB Principal Asset Management. She then moved on to join Hong Leong Bank Berhad as an investment specialist and subsequently to Royal Bank of Scotland, overseeing the team of investment consultant. Ms. Leong has more than 18 years experience in retail sales and marketing and graduated with a Bachelor of Commerce majoring in Management and Marketing from Curtin University of Technology, Perth. Our second speaker for today is Mr. Robin Yeo. Mr. Robin Yeo has more than 20 years of investment experience and has been with Maybank for the past 8 years, where he formulates investment strategy and asset allocation. He has had experience managing traditional long-only funds as well as hedge funds. Prior to Maybank, he was with PhillipCapital, a leading alternative investment manager in Australia, where he was an executive director as well as a core manager at the award-winning Pengana Asia Special Events Hedge Fund, which received various awards from Eureka Hedge and World Finance. Robin started out in equity research and has been a member of ranked research teams at CLSA and RHB Research Institute. Robin was a British Chevening Scholar at the University of Nottingham, UK, where he graduated with a MSc in Economics. He's a CFA charter holder and also graduated with a Bachelor of Science in Accounting and Financial Analysis from the University of Warwick, UK. Our third speaker for today is Ms. Cheng Siu. Cheng Siu joined PhillipCapital Management Sdn Bhd in March 2023 and brings her about 25 years of working experiences in various industries. Prior to this, she was a senior fund manager, assistant director from East Spring Investments Berhad, where she managed Asia Pacific ex-Japan unit trust funds and private mandates, institutional local mandate. Prior to that, Cheng Siu was head of equity from Libra Invest Berhad, where she managed unit trust funds, private mandates, and investment mandates covering Malaysia, ASEAN, Asia Pacific, and global. She gained her fund management experience in ASEAN and Asia Pacific markets, where she was with Yobi Asset Management before joining Libra Invest Berhad. Cheng Siu has won several Lipper Fund Award Malaysia for the category of mixed asset fund as well as equity trust fund under her management. She is a chartered accountant of MIA and a CPA Australia qualified professional. She holds a Bachelor of Commerce from the University of Melbourne. Right. Okay. Today's session, as we said earlier, will focus on factor-based investing and thematic investing. For the benefits of the participant, factor-based investing is an investment strategy that involves selecting and weighting securities in a portfolio based on specific characteristics or factors believed to drive investment returns. These factors can include attributes such as value, momentum, quality, low volatility, and size, and more. The goal is to outperform the broader market or achieve specific risk and return objectives by emphasizing these chosen factors in portfolio construction. While thematic investing is an investment strategy that focuses on capitalizing on specific long-term trends, themes, or disruptive forces that are expected to shape the future economy. Thematic investors target broader cross-sector trends, and these themes can cover various aspects such as technological innovations like AI, renewable energy, demographic shifts such as aging population, urbanization, or societal changes, sustainability, health, and wellness. Right. Let's kickstart our roundtable session today. Perhaps we can start with a very general question, right? Perhaps from Mr. Robin, then Miss Penny, and finally Cheng Siu. right? Are there any trends, Mr. Robin, or developments within factor-based investing and thematic investing that investors are currently looking at?
Thanks, Kim Joe. Maybe I'll just start off with the factor-based investing side. As you mentioned, there are quite a number of known factors which people are using now, like value, growth, momentum, and such. So in developed markets, not so much in Asia, but in developed markets, people are now trying to use other alternative data for factors. So now they are looking at transcripts, right? In other words, what companies present during earnings, and they create a transcript. And what they do is they run a program to do some sort of natural language processing, and then they kind of figure out whether the sentiment from that earnings report is good or not, right? Whatever the management says. So they are trying to incorporate all this alternative data into that, which is beyond the normal traditional factors which we are looking at. These are just an example of that. Yeah.
All right, thanks, Robin. Penny, would you like to share more on your thoughts?
Okay, on thematic wise, if you look at developments and trends, there are many trends. Of course, now people are talking about ChatGPT, the AI and all those. Of course, if you look further, you will have maybe food security. These are some of the trends that's emerging. Now, food security, everybody knows food is also very critical in that sense, and prices of agricultural goods are going up. So, and of course, we cannot run away from the metaverse, blockchain. All these are a lot of developments that's happening underneath, like whether it's going to be an investable theme, we're yet to know, but food security definitely. And of course, there's something that comes along that calls experience economy that we are looking at it. Like younger people now are going for the experience. Like you don't need to have tangible asset like a house or a car, but the experience that's important. I guess maybe this is also a trend that was also caused by a pandemic, I'm not sure. But now people are talking more about experience. If you're talking about the younger generation, they don't need to first think about, I need to buy a house, I need to buy a car. But what's the experience when I travel, what I see, what I eat, what I actually observe? These are the things that some trends and development that we are actually looking in underneath that's developing in the thematic scene.
Okay, good to know that. Actually, I think food security team is also one of the teams that is currently ongoing. Cheng Siu, would like to share more on your findings?
Okay, probably one of the prominent one, that we see in the past 5 years is actually the sustainability fund, right? Over the last 5 years, I think these sustainable funds outperform conventional funds, So I think if you look at the climate change, a lot of natural disaster which is happening right now, like what happened in Morocco and also lately Libya, tens thousands of people, died. I think more and more going forward in terms of ESG, I think this investment theme will catch a lot of attention going forward. And in fact, in the past 5 years, the sustainable funds is actually outperformed the conventional one. I think the outperformance will continue going forward. Yeah.
All right. Yeah, I think as a lot of nations are moving towards the net zero direction, sustainability team is also one of the focus that investors will be looking at moving forward. Perhaps we can drill down more on factor-based investing, Mr. Robin. Could you share some examples of specific factors that have shown strong historical performance and how they have performed in recent market conditions, right? Different factors such as value, growth, even size, momentum. Yeah, how are they performing lately in the recent market conditions?
Sure. I think if you look at overall performance from Malaysia, you'll find that actually the factors do pretty well, generally speaking. Factor investing does pretty well. So stuff like value, in other words, whether it's price to earnings, price to sales, it has a pretty good edge in terms of getting outperformance. And then you couple it with momentum, right? What has done well in the past year tends to continue doing well because, sometimes companies is in a trending stage, right? Where the company grows and continues growing, right? So you match these two factors together, generally speaking, in Malaysia, it's been doing well. Of course, as we know, not all factors work, but these are the two most popular ones. Then there's the other factor of quality, right? In other words, whether the company has good margins, whether the return on whatever is invested is high, and that shows that the company has good moat. It's the competitors are unable to outcompete this company. That also has shown quite good consistent performance, not just in Malaysia but other markets as well. Yeah.
Yeah. Thanks, Robin, for sharing. Cheng Siu would like to share more on what do you think, like what factors actually perform in the recent market conditions?
Yeah, I think that's a concern of a lot of investors, whether to go for growth or value or momentum, low vol or high vol, right? But it really depends on the investor's time horizon and risk appetite. I just want to point out that, we just talk about the two prominent one, the growth and the value, right? The general perception is growth have actually outperformed value, right? Think that the growth stocks are expected to outperform, over the market over a longer period. But in the past 20 years, actually in the first 10 years, value actually outperformed. It's just that for the last decade, growth has outperformed. I guess this is pretty much, also due to the very low interest rate environment. And of course, growth investing very much depend on the prospect of a company, right? So ultimately, it still come back to the fundamental of individuals. So not so much on whether growth or value. I will more towards a blended, right? Blended, some factors, some growth, some value, and also thematic as well. Yeah.
Thank you, Cheng Siu. Good to know that blended approach seems to be more like a conservative kind of approach. We can have a mix of both. But is it accurate to say that specific factors have the potential to deliver better performance compared to the overall market condition?
I think it depends on the market condition, right? Now we are talking about the interest rate hike cycle at the tail end. Probably, Fed is going to unwind the interest rate hiking, from hiking to decline, reduce the rate going forward. And that works well with the growth. That is the general perception. So if that investment thesis come in, then I think growth will probably outperform. Last year, as you know, that value outperformed growth pretty much, yeah. So we have to look at the dynamics of the market and the development, and also some economic data as well to decide whether which factor do better. Is really depends on the condition of the market and the global landscape, yeah.
All right, thank you, Cheng Siu. Mr. Robin, would like to share, are there any region-specific factors that investors should be aware when constructing portfolios in different countries? Like, for example, US, perhaps, maybe growth could be more in focus, right? Asia, traditionally, we see a lot of banks there. Maybe value, I'm not too sure about that. We'd like to share more on your perspective.
Sure. I think Cheng Siu got it right. Investors should often look at, I think it's more suitable to look at multi-factor models, right? So you have a blended approach of value, growth, momentum, and such. But if you just talk about singular factors, I think Cheng Siu is also right. In the past 10 years, in the US, momentum and growth has done well. I mean, it's all the large part of the returns from the US has come from the platform companies, right? Like Google, Microsoft, and such. And these companies are high growth and not so cheap, so they've done well. But it's also true that generally, even if you have platform companies, the cheaper platform companies tend to do better than the more expensive ones, right? So that's the issue there. But generally speaking, in the past 10 years or so, it's been more quality, momentum, and growth in the US. Over in Asia, it has not been the case. If you look at Japan, value has done well, right? As you mentioned, it's probably also because Japan is a market where there's a lot of banks, maybe old economy, and value does play a part there. And if you look at Japan, they don't have that many platform companies, right? So in order to outperform the market, we've seen that actually value has done better in that sense. In Asia, also outside Japan, stuff like Hong Kong, China, Indonesia, India, and such, we find that value works, quality works, but I would say a blend of value, momentum, quality, and all that works better. And I think why we are using this blended approach or multi-factor models, as people say, is that it's not just in regions, but the economic cycle. Some factors work better during the different economic cycles, as Cheng-Si pointed out, growth phase, maybe low interest rates and such. Usually after a huge correction, value works best. And towards the late part of the cycle, value also works well because, things get extended and momentum and growth doesn't do well. So I would say, if you look at it, it is a better approach to just have a blend of all these factors.
All right, thanks for the sharing. But a pitfall that investors often argue on factor investing is that factor investing often relies on historical data. Robin, a follow-up question on that. How do you account for changing market dynamics and adapt your factor-based approach accordingly?
I think for factors, I guess, we've done a lot of work trying to backtest all sorts of factors to see whether they work, but often what we need to do is to find out whether it makes sense, right? The factors, economically, whether they make sense, financially, whether they make sense. So when you talk about value, why does it generally work? Oh, of course, you're buying cheaper, lower valuations. And from a discounted cash flow perspective on all that sort of thing, it makes sense, right, to buy stocks which are generally cheaper, right? And then we talk about momentum. Why does it work? Because quite simple, because whenever a company is doing well, the management is probably on top of the game, right? And so they are managing the company well, right? And on the other hand, you think about it, if a company's stock price is declining, why does it continue to decline? Maybe it's struggling to turn around the company because of various factors like competition, or maybe the product's not so good anymore. So all these things must have some sort of, must be something realistic, right? Or something economic which we can see. So even though, yes, there are periods where some factors don't work so well, once you have factors which are based on academic research or there's economic fundamentals, then I think it's quite all right. I mean, even if you look at quality, ROEs and all that, it's very, very fundamental, like economic based stuff, right? And there's of course a lot of literature, academic literature, which also backs up these factors.
All right, thank you, Robin. But is it correct to say that there's no one factor that works the best, and it really depends on the market condition, it depends on the economic cycle, or even country specific when it comes to, putting in factor investing into your investment decision-making process? You are right.
Of course, there's no one single factor. No one has that holy grail of investing. That one works, right? And of course, if you are a pure quant or fund or factor investor, what you do is you try to create models which tries to, in a way, tilt the factors based on the macroeconomic conditions. So I think, as Cheng-Si pointed out, if you're in a growth environment, you want perhaps to have more momentum factors in there. If you're predicting a downturn, maybe your models does anticipate a downturn, then maybe perhaps you have more quality and value and low vol strategies in there, more low vol kind of weights in your model. So So if you are a kind of quant investor, you'll be looking into all these things to try to adapt your model based on the economic environment.
All right. Thanks, Mr. Robin. Cheng Siu, would you agree with what Mr. Robin said just now? And perhaps you can also share like how could investors assess the suitability of a factor in various market conditions, like which factor is good, which factor is bad in various market conditions?
Sure. I agree with Robin. In terms of investment, right? When we're managing money for our investor, the expected return is not the only consideration that we have to consider, right? The risk management will kick in. Last year, value outperformed, but it doesn't mean that value deliver, positive return. It's just that down less than the growth factor investment. So in the environment which is very challenging and a lot of uncertainties, maybe the risk management will kick in, how to protect your capital. So therefore, they will put their money in. We should put our money in value, which is low PE, right, and also low vol, so that to prevent, or to preserve the capital. So that is the objective, for the investment. So now probably your next question will ask, okay, look at the current environment and economic cycle, where we are right now, which factor is the best factor? I would say there's no best sector or best factor, in the investment space. There is only a strategies that, which direction that you want to go, right? And what we can do is to analyze and justify, at this moment, probably we should consider, because value has outperformed last year because of an interest rate declining, right? So, going up. So now at the tail end, when interest rate is coming off, maybe we should look at growth, right? And also those that company that has been bashed down and again is bottom up, right? Those companies that with a very strong cash flow, strong fundamentals, and these are the companies that we will look at, especially the quality growth company. Yeah. Thank you, Kim.
All right. Thank you, Cheng Siu. Maybe we can also talk about how can actually investors involve in the factor-based investing, like perhaps the traditional active fund management could be one of the ways, right? Invest money into traditionally actively managed fund. Perhaps I think some of the ETFs are also tailored to a specific factor. For example, iShares, MSCI, value ETF, things like that. Any thoughts on that, Cheng Siu?
Again, it depends on whether what is your investment objective and your risk appetite, right? If you are looking for ETF, this is something that is more passive way of investment. Yeah. Just follow the market, right? And see which factor that you are betting it right, whether it's value, quality, or dividend, or low vol, or something like that. While as an active fund manager, we will say we do not constrain ourselves into only one or specific factors. Whichever country or region or companies that provide alpha and looks attractive, that is our bet. Yeah. Thank you.
All right. Okay. Let's move on to thematic investing. Right. In the beginning of presentation, we shared some of the emerging trends. We talked about AI, we talked about aging populations, even food security team, sustainability team, things like that. Miss Penny, would you like to share how could investors identify and evaluate long-term viability of these thematic investment teams?
Okay, sure. I think when we first talked about thematic investing, it sounded very big because it starts from mega trends and all those. Then how do you actually invest in mega trends and stuff? Now, really, thematic investing is about selection of current themes as well as the stocks within each theme. That means you want it to be relevant, and then you utilizing really our entire platform where we look into how we can benefit from this. Now, the team composition will constantly adapt as new teams emerge, and then the older teams will peak. Now, it's important to change. You can't be just only one theme and you hope that the theme will stay forever and ever. But of course, it's a long-term thingy. We don't intend to just go in 1 year and then that's it. So now each team is actually really represented via very active stock selections, and companies considered to be key beneficiaries of that theme, which we also regard as attractively valued on the fundamental wise. So you look at the bigger picture, the theme, you also look at stocks, and then we will drill down to the stocks whether fundamentally it is an attractive and really benefit from this theme. This is very important. Now, so when you look at investable theme, which typically have its origin through structural shift induced by, like you say, technology, regulation, or socio-economic factors like all the ESG and all this is also regulation and all that. Now, while the shift might be slow and they start up very small, it is typically powerful in nature and growing regardless of short-term cycle, right? So it is really important to distinguish long-term themes from short-term trends. So now the latter of which tend to be priced into stocks very quickly, it's just a trend, right? But typically don't last much longer than new cycles. So people are talking about it. So why are we not jumping into ChatGPT immediately, AI? So of course we need to have a look at it as, is it a long-term investable theme? So likewise, less than specific visions from the far out future are usually too vague or to actually trigger any investment decisions today. Now, the idea generation stage also identify themes can be both top-down and also bottom-up. So from a bottom-up point of view, we actually look at theme might arise from a wide range of sources without judgment yet, about the actual investability. So there are enough stocks to invest, degree of exposure, pureness. So all these things, we also look at stocks, whether you have enough stocks, what's the exposure, what's the pureness of these stocks that is related to this theme. So now bottom-up driven themes might arise if specific patterns become apparent across, a number of stocks. So here is really important where we have a platform to play a role where we really ask different parts of our analysts, our manager, our PM on all these things, and we can do some research on it. And definitely all these themes, in particular as themes, often themes are run across sectors or region regardless. I mean, ESG, food security is not only happening in Europe or in developed world, even Malaysia or Asia for that sense, right? So that's very important where we are connected everywhere to realize that because themes do not just run in one region or one specific country. So that's the answer for that question.
All right, thank you, Penny. Mr. Robin would like to add on top of what Penny has shared earlier.
Yeah, sure. I mean, I think Penny's got it right. I mean, to be honest, some of these short-term themes, it's very hard to know whether they will extend on to be something long-term, right? There were a few years ago, people talk about BRICS countries, and it was big for a bit, right? And then that theme faded out. But now it's back again, right? Now people talk about BRICS again. So sometimes, to be fair to investors, thematic investing, I think it's quite difficult in a sense to stick to one theme. So as Penny says, sometimes you probably have to go and look for ongoing themes and look for the new themes which are emerging, and then look into the investment opportunities out there to incorporate them into your portfolios. Because as people, I think all of us here have many years of experience. We've seen themes come and go, right? Some of them last few months, some of them there was a commodity theme that probably lasted 2 years, and then it was over, right? But there are some themes which probably will last longer and longer. I think you pointed it out. Sustainability is one, right? I think because it affects our lives in the longer term. So maybe that is some theme which will be ongoing in the next even 5 to 10 years. Yeah.
All right. Thank you, Robin. When we talk about opportunities, we should also talk about risk as well. Cheng Siu, right? how can investors access the risk associated with thematic investments? Notably, just now, Mr. Robin will share about commodities. Probably, it will last for maybe 2 years. AI, we see AI rally of late. How could we actually evaluate whether those themes that we identify are actually sustainable?
Yeah, what Robin and Penny mentioned just now, especially the thing that doesn't last long, that is very risky to our investors. So we should actually avoid those so-called short-term thematic play, which probably investor will catch at the peak, and then that is where you lose your money, right? So what we like thematic play actually, and how we identify thematic is from what is going to change from today. I mean 10 years later compared to today. So the mega trend is something that we are more interested in. Whichever team that we are investing in, it has to be supported by the earnings going forward. So I always talk about the S curve, right? We are not going to invest something at the very beginning stage whereby you top now, but it only kicks in, the effect only kicks in 10 years later, right? We are looking for in the middle of the S curve whereby the theme is already happening, not going to happen, right? So we identify a few themes like AI, robotic, EV, and also ESG, the clean energy. These are the themes that is going to last for years. And we know that when we invest in this theme, it is going to have a multi-year growth going forward. And we are not going to lose money unless things change, totally unwind the whole thing, right? Having said that, like what is happening right now, Nasdaq being the winner year to date, recorded 30% year to date gain is largely driven by maybe 7, it's all about AI things. So the next question is, are we going to change, when the company, the share price already hit that kind of high driven by the AI, play? My answer is no. Yeah. We are buying growth stock according to the investment, the thematic team, at reasonable price. This is how we protect our investors' money, not to lose money, trying to catch and chase high. So we really have to assess like what is happening right now in Malaysia, right? The Johor Bahru. Anything about the Johor Sultan, about the financial zone, about the forest city, it's all going up so much. And you see that some of the property counters, it can hit, rally like 50% within few days, right? So we will call that is a bit too irrational. So what we need to do is we have to avoid those crazy rally, but certain rally is real, yeah. Therefore, we really have to study and see whether is it still feasible and is it still wise to go in or not. These are all the research and study that to form our investment decision. So yeah, thematic play is very much in play now. Yeah.
Yep. Thank you, Cheng Siu. Agree on the S curve where I think during the acceleration phase, those companies that in acceleration phase could actually capture the biggest market share and the revenue, within the market itself. And also agree that some trends are actually on the longer term, some trends are probably short term. Miss Penny, would you like to also add on top of what Cheng Siu shared earlier, how can investors actually access the risks associated with thematic investments?
Okay, I do agree with Cheng Siu, and I think she has summed it up quite very, very easily, in that manner. I will give you a little bit more detail because I really think she summed it up very nicely. Now, investment themes, like worthy of their name, will have a long lifespan ahead of them, right? But that doesn't automatically make them good investment in every point in time. So that's why, like Cheng said, the entry point, time, where we're going is very, very important. Now, that will be eventually be recognized by the market, which will then price in their future potential. Right. So conversely, a change in the likelihood of this theme materializing in the future will also quickly result in correction of that value. Okay, let me give you an example. Themes such as renewable energy, internet, biotech. All this, I think, the last few years, people have been talking about this, and especially when during a lockdown, suddenly you see all the work from home, the stocks, cybersecurity, all those have gone up because we're all working from home. Cybersecurity is important now. Now, this have turned out to become material parts of our daily lives presently, and I think by cybersecurity will continue to become very relevant to our daily lives, right? But also, if you look at it, they will also all experience years of volatility, right? And also poor investment performance along the way as investors' expectation really, they price in too fast, too much, too fast. So that's why the best timing for theme investing is usually at the very beginning, when the theme starts to attract the attention of mainstream investors and corporate decision makers. So stocks typically rally in these early years on the back of high expectation. Think of the dot-com bubble, which then often followed by a sobering sell-off when they realize, hey, this is maybe too fast and too high. Then they start to move much more slowly than originally they thought it is. Now, this also in a way create the second entry opportunity into the theme after the initial hype has passed and the underlying trends which fuel the theme will remain intact. So I think we had the dot-com bubble, remember, that's too fast, too short, but now we are still in the technology, we are still talking about technology. Of course, it's not a dot-com bubble, but we are still talking about technology and all those, and it has gained to be very, very important in our daily life. So timing the entry and exit point of an investment in a theme is just as tricky as with single stock investment. It's the same, and requires really both bottom up and also also tracking down the top down development. I think thematic now is similar where you think of investing in one stock, one company, you look at top down, same thing, we do that too. So this is where a high level view will allow us to detect when excitement of the investment community towards the theme is cooling or accelerating, while the bottom-up valuation really gives you that kind of discipline where you need to go in and stay invested for a long time, a longer period. So these are the things, or you also look at if you think the bottom-up valuation also gives you a view that, hey, maybe we are in for too long, it's time to get out. So this works just like investing in a single stock itself. So that's what I would have to add on to the question.
Maybe I just can chime in on that. I think investors mustn't invest in stocks just because of the theme. I think Penny and Ching has pointed out they should also look at the fundamentals of the company and also look in the overall economy and the environment they are operating in, not just because it's AI then jump on it, right? So we should also look at how the company is doing, whether it's cheap enough, and how the company is operating. So I think that's really it as well.
All right, thanks, Penny, Robin. Let's move to ESG. Since we are now moving towards net zero, sustainability, things like that, what are the challenges and opportunities for thematic investors when it comes to ESG consideration? Robin, would like to share on your perspective?
I think over in Asia, I guess ESG investing is a little bit difficult because in Asia, a lot of the companies do not provide enough data to do sustainable investing. So only the big caps have enough resources to report on how they are doing environmentally, socially, and their governance. So I think that's one of the big challenges in Asia because a lot of companies, they don't have the resources, and therefore the scope for sustainable investing is harder, right? But I guess as it catches on, more and more companies are looking into it, and I think we've seen that as well in Malaysia, because what we've seen is if you don't pay attention to sustainability, you lose money, right? So we've seen various rubber glove companies in Malaysia. They were caught because they did not treat their workers well, and therefore their their customers were not very, very happy, and then share prices tanked, and and now I guess more and more companies also now see the need to be more sustainable in their operations. Yeah.
All right, thanks, Robin. What about you, Cheng Siu? Any challenges and opportunities for thematic investors when it comes to ESG considerations?
Yes, definitely. It is a very important theme going forward, maybe for the next few decades. Yeah. Recently, Malaysia has announced a Malaysian National Energy Transition Roadmap, Phase 1. So the initiative is, I think, require up to about 1.85 trillion in financing. So that figure is a very huge figure, but of course, this is not overnight. So it's like for the next 20, 30 years, right? So actually the ESG space, it gives a lot of opportunities. Yeah, a lot of players going to participate to make our environment clean, to make it feasible, so this is the opportunity that we see. Yeah. But of course, it comes with the challenges as well. As Robin pointed out, developing country especially, they got limited muscle, right, to comply with the ESG, all that. So it needs some time. So what we want to see, is not whether you have fulfilled the ESG requirement or not at this point in time, right? It's more important to see whether you have put in any effort, to improve your ESG compliance over time. So I think this is what we want to see. That's also the reason why we actively engage with the management in terms of the ESG, to help them, to hold their hand, this is something that you have to do, right? So this is in our region, I think the ESG, but we see that a lot of collaboration in a broader wise, globally within, maybe Europe, China. China has played a very important role right now in terms of the ESG, especially the clean energy wise. Yeah. So going forward, there will be a lot of investment in this space. There are a lot of opportunities in this space. Yeah. The challenges is something that, we have to work together. And also, I think the relevant authority also doing that, to standardize the accounting reporting, in terms of how do you report the ESG, a lot of things that need to be put in, and it need time. Yeah.
All right, thank you, Cheng Siu. Penny, would you like to add your thoughts on ESG?
Sure. I think ESG is gaining more and more importance. We just had the SDG conference in New York on 18 and 19, where there's going to be, we just finished that, like the blueprint on your SDG goals and all those. Of course, if you look at the SDG goals, we are not meeting most of it, right? Overall, not just a region or what, I think the worldwide now. We look at ESG in two phases, the footprint and the handprint. Now, footprint is quite easy to tackle in that sense. Now, it is important because for us, it's really coming from Europe. I guess all this ESG and all those is very, very big thing in Europe, and I'm really being in the firm learning a lot to have that ESG DNA in our blood, to go up and especially in the investment platform. Now, really, you look at it, the SRI research really related to discussion and the company engagement, all those are important. I mean, there's really, I don't think there's much, a big risk of not investing sustainable, because a lot of companies definitely look at E, S, and G. I mean, the E and G, you won't really run away from it. The S now is even more important, right? So for us, really, all the risk management is really core part of our process, and as part of this ESG considerations, is also part of our investment case and also decision-making process, right? So this is one part. Now, then I mentioned about the handprint. What is about the handprint? Now, we are investors. We are investing. We definitely, I think investors, when they invest, that they really they want to look into making money. Opportunity. Where's the opportunity? So we are also interested in ESG consideration with your handprint. Imagine your hand pushing. That means these are the enablers. How do we invest in these enablers that will enable us to be in a more sustainable world? the main thing is also we are looking to become more sustainable, right? So this is the handprint part. So on this path towards a more sustainable economy and also society, we really look at companies that provide solutions that allow governments, companies, individuals, etc., to lower their individual footprint, which will likely to build their businesses. So we are therefore interested in these solution providers as investment targets. So something like you look at clean water, next generation energy, you can call it decarbonization, really to focus on such companies that will likely to benefit from the long-term structural trends towards a more sustainable world. How do I invest in this? Enable the handprint to actually make my footprint lesser on this earth and to make it a bit more sustainable. I mean, a more sustainable world. So that's how we look at the opportunities and also the challenges, and from a footprint and a handprint perspective.
All right. Thanks, Penny. Nice sharing. Maybe a follow-up questions on that. Apart from ESG, apart from AI that we discussed beginning of the roundtable session, right? Are there any emerging themes that you find particularly interesting right now?
Of course, I think the next one people will talk about or have already talked about is food security. We definitely know that an agricultural, and the agricultural part is also where plantation agriculture. Now a lot of all those food that's agriculture is for feeding the animals, and that will also cause a lot of contamination. So that part of it, and that's why everybody, I mean, this is joke aside, everybody's saying that eat less meat, or you may go a bit more meatless and all those. That's also part of agriculture and all. So because main part of the agriculture now is for feeding food to animals, because we are all eating more meat. I mean, compared to my grandparents' time, we are really consuming a bit more. So that's also one part. So I think food security overall, the whole chain, it is going to be a trend that we are slowly seeing emerging already. And I've shared a few that in the beginning, something that could come up, but I think food security has already come out, and more people are looking more into it.
All right, Penny, thank you. Robbie would like to share, is there any emerging themes that you find particularly interesting right now?
I think a very, very early theme which we are seeing is that because of what's been happening in the tensions between China and US, so there's been a bit of deglobalization, right? And what we are seeing is supply chains are being localized, and that is a theme which will be going on for many years. I would say, because there was a theme of globalization, now it's a theme of deglobalization. But I'm not sure how we are going to have any investment opportunities on that, right? So that's a bit difficult. The other area which we are also seeing is what we call the global south countries, right? The very, very poor countries. And now the global south is actually led by China, India, Indonesia, right? So because of what's been happening, what we are seeing is the global south, they want to, because the concerns of global south is quite different from the rich world, the Western world. Like you say, food security and all that actually is more relevant for global south. Climate change also much more relevant for global south, because you see much more weather changes, weather floods, earthquakes or whatever in global south. So we are seeing this theme where, some of these poorer countries, whether it's in Vietnam, Indonesia, India, it's coming out as a block. So I don't know whether somebody will come up to talk about this as investment opportunity down the road, because down the road, these are the countries which appear to have more economic growth, more opportunity compared to, countries which already have developed, like say in the West as well, even in China, right?
Right, thank you, Robin. So, Cheng-Siu, would you like to add more on what Robin has mentioned earlier? Do you think, US and China, they will decouple or recouple again?
Yeah, I think probably I add on one or two, right? I think there is a very big thing now that we are talking about, which is de-dollarization. So this is a a big topic that we are going to discuss and do a lot of work going forward. Whether it is going, I think it's already kickstarted the process. Yeah, it's just that how fast the de-dollarization can get to a significant level, which I think it will take a long time. So this is one thing that we have to bear in mind. Yeah, in terms whenever we do our investment decision. And another thing that probably I want to touch on is, now today's world is actually dominated by the two, US and China, right? So we really have to look at the tech localization in China and also the reindustrialization in the West. And these are another thing. But what more interesting, to note is what is happening right now is Huawei's thing, right? If we are talking about the thematic play. So we are very busy in identifying, with the Huawei's breakthrough when they launched this Mate 60 Pro during Raimondo's visit in China. A lot of topics, a lot of discussion and points has been, thrown here and there. And who will benefit, who will lose out, it's a thing that, it's a big thing that we have to really look at that. So with the Huawei's breakthrough, what we concern is there any impact to our local front, the tech ecosystem? Is there any changes? So this is the work that we are doing right now. So I think Huawei thing is something that is ongoing and is very interesting to note. Yeah.
Okay, thank you, Ching Siu. So we have covered a lot of factor-based investing and thematic investing. Penny, how could this be applied in Malaysia's context?
I guess if you look at thematic investing for Malaysia's context, investors are getting actually very, very well knowledgeable in that sense. Now, because thematic investing is very simple, it's just things that you see. Now, what are the theme? It's pet economy. I can tell you when I speak to customers, they know it better than me because a lot of people own pets now. So what's the potential of, a pet economy? And, pet economy is actually growing quite healthily. So I think if you look at that, thematic investing, it's really one thing. It's not really constrained to a region, to a country, to a geographical area. So that's why I think it's really, really, applied everywhere. So one theme that we talk about pet economy, if you talk about renewable energy, I can see a lot more EV cars coming to Malaysia. So all this that people can see, not only in Malaysia, but around the world. So I don't think that it's just only for Malaysia because that's where we have taken out the really traditional where geographical allocation, all that. But thematic is across regions, across boundaries that even where you are, you definitely see it coming. Maybe it's not fast. I mean, the pace may be slower. Like maybe pet economy is not as growing as fast as it is in Malaysia compared to maybe China. And in US, maybe it's not also growing as fast as China, where people are saying that there will be more pets than human anyway. So these are the things that you can see, but maybe the pace is different in terms of growth. But I really think that it's not only just applicable for Malaysia or for in the developed world. That's what I want to say about the thematic investing.
All right, thanks, Penny. Robin, would you like to add? Is there any interesting themes that you find in Malaysia?
I think Malaysia market now, there are a lot of opportunities in sustainable investing, right? Because a lot of fund management houses, including Maybank, has already introduced a lot of, SRI funds, a lot of ESG funds out there for you to choose. I think some of the asset management houses, of course, have already launched tech funds way long time ago, a couple of years back to catch on all these themes as well. So I think for investors, there are quite a number of opportunities in thematic investing and such. In terms of factor base, it's less. I think, of course, developed world, there are tons. Like you mentioned earlier on, there are ETF, so you can buy value ETF, you can buy growth ETF, you can buy a momentum ETF in the developed world. But I think in Malaysia, it's not so prominent at the moment. I think for ourselves, we are launching a multi-factor fund soon in Malaysia, right? So that would combine all these elements. But if you look at out there, there are not so many. Although in the past, there have been, Malaysia Growth Fund, Malaysia Income Fund, there was a very, I would say, the basic kind of factors in that sense. But in terms of factor investing, I would say it's probably less developed in Malaysia than, let's say, thematic. In developed world, it's quite easy for factor investing. You can just buy all the ETFs and combine it, up to you.
Okay, thanks, Robin. Cheng Siu, any thoughts on that?
I would think there are many things that we can play in Malaysia now, especially after the state election. Things are getting more positive. The clarity is there, especially when we see, our PM has been very hardworking, actually traveling here and there. Last week he was in Singapore, and I think now he's still in China, if I'm mistaken. Right? There are a lot of plays actually. I can actually list a few. One is, to capitalize on the US-China tension. I think the manufacturing relocation is one thing. China plus one is another thing. Infrastructure, because, for the incumbent government, after the state election, that is quite shaky, right? If they don't do something very bold to rescue and to improve our economy, I think probably they are going to lose in the next election. Therefore, I think they will try very hard in terms of, I think it will go back to the old way. Although we don't quite like the old way, which is pump priming, right? But we need that because we need that in the shorter time. But of course, we have to couple with the longer term strategy whereby, the education, R&D, all that, right? But in the shorter time, I think what they can do is quite limited. Therefore, you will see a lot of mega projects coming in. That is another thing, yeah. So of course, like what Penny mentioned, the ESG, the E especially, the clean energy is a global effort, yeah. And with the rolling out of this NETR, all this is and also the financing, more and more financial moving into ESG financing. This is another thing that we have to look at as well. Therefore, you see, I have named so many already. So Malaysian market, I think at this level, especially with the valuation now trading at quite cheap level, I think besides the thematic plays, the value play is another one that we can look at. Yeah, that's all from me.
All right, thank you, Cheng Siu. Perhaps our last question for today's roundtable session. Penny, what advice do you have for investors looking to incorporate factor-based strategies or thematic-based investing into their portfolios?
Okay, for investment through themes, you can actually look at it this way. First, you can actually look at it as your core portfolio, where you have 5 to 7 themes in your portfolio, and you think that covers most of it. But if you have particular, interest into one certain theme, you can add it on as a satellite to your portfolio. If you are really highly convicted about AI theme, about technology theme, then you can add on to so-called your multi-theme investment to actually have those satellite that you really, really like in that sense. Now, the main thing is, for me, I think it's important to be invested in a multi-theme rather than just one theme, unless you're very sure or you have really, that this theme, I have high conviction about it, I really want to put my money and I'm ready to sit on it for a long term, right? So that's one part. So for really thematic investing, it's about different themes when you can add on to your so-called the core portfolio, and then you add on as a satellite to whatever that you like. Now, so that's where I would think that, investing in terms of thematic, and that's for diversification in themes. But if you are really a single theme person, just go ahead for a single theme that you like, and you can just invest into that. That is to add on to whatever existing portfolio that you have. But if not, multi-theme as a core, and then you add on to whatever theme that you like if you have high conviction. That's what I think of the thematic investing, and it can work as a core global equity portfolio in the investor's portfolio.
All right, thanks, Penny. Robbie, any thoughts on that? Any advice you have for investors looking to incorporate those strategies into their portfolio?
Yeah, I think for factor-based, I think we have mentioned it as well, that you should look for more of a multi-factor-based approach, a blended approach, and that will help you right through the various cycles, because not all factors work in different parts of the cycle. That's one. And I think for theme, I think it's just echoing what Penny mentioned. It's not to just rely on just one theme, because sometimes the themes may come and go, right? So it's probably to have a multi-theme approach. And of course, even if you invest in a theme, you have to also make sure some of the fundamentals make sense. So don't buy things when valuations have gone ridiculous. So I think just common sense would also help in that sense, like, for thematic investing.
All right, thank you, Robin. Cheng Siu, any final words to the audience?
Maybe as a fund manager, I can share, how we construct our portfolio, whether to blend in value, growth, or thematic, right? Normally, I would not suggest, everything, bet everything on one thing. That I think is not wise to do that. I keep stressing, when we are chasing return, I think risk management is very important too. So when I construct a portfolio, which I will advise the investor to do so if they manage their own money, right? I will have a core, anchored by value with dividend play, which actually provides stability to our portfolio, right? And then certain percentage, growth stocks, and also certain percentage in a very sexy thematic play, which you have to know that, that kind of risk is something that you are able to take, right? If you lose, then you know what you're going to do. So the discipline of the cut loss has to kick in, yeah. So another one is very important, when we manage our portfolio is tactical, right? We really have to lock in our profit in a very disciplined manner and cut loss in a very disciplined manner. So that is what I can share with you. Yeah.
All right, thank you, Cheng Siu. So we got you diversification, discipline, multi-factor, teams, but most importantly, it really have to align with investors' long-term goals and objectives. Right. We'd like to conclude the session today. Thank you so much to the audience for dialing into our session, watching our live on the Facebook, right? And we also like to thank to Miss Penny, Mr. Robin, and Cheng Siu for agreeing to be our speakers for today's Phillip Roundtable. See you at the next session. Thanks.